All right, we are rolling. I think we are good. All right, what is good, ladies and gentlemen? It is your boy YOLO. Today we're going to be going over 3 reasons why you guys are not profitable traders, and I'm going to help you fix that so you can make that bread. Let's go. All right, guys, it is actually the next day. I just stopped recording because I lost power at the crib. Something happens every time I try to record a video, but let's hop into this. Number 1 reason why you guys are not profitable traders, I know 95% of you do this, and you probably don't even realize you're doing it, is you guys break your rules every single day you're trading. You need to be going into every single trading day with a set plan. I like to call it a mechanical plan. I have my own little mechanical plan set up. It's like a chart, graph, whatever you want to call it, that I'm going to show you guys and break everything down for you. And basically just have one of these plans gives you a better understanding of when to take a trade and when you shouldn't take a trade. All right, so here's the little mechanical plan that I have drawn out. I use this every single day. You guys can either copy this, draw it out on a piece of paper, have it up on your computer, but you need to go into every trading day with a plan that you follow, keep yourself disciplined, etc. So we're going to go into this. You have your trade set up into your basis, and then when you shouldn't be taking a trade and when you should be trading, right? So we're going to go to the trade setup first. Pretty self-explanatory. Say you're watching the market and you see a trade starting to form, right? So the next thing you're going to want to do is go into your basis. Now, what's your basis? Your basis may be different than mine. Everyone could have a different basis, but the 3 main things I base my basis on, first of all, is does the trade setup correspond with the trading strategy that I use, okay? Then number 2, I look at the time of day it is the market high volatility, low volatility, do we have any news coming up, etc. And then last but not least, the analysis I made, is the analysis I made correct, right? So I'm looking at those 3 things as my basis. Now say they all align, right? Then you come down here to the right and I'm taking the trade if they all align. But now if even one of those does not line up correctly, like if one of those is not, one of my basis points is not correct, I'm coming right over here to the left, not taking the trade. All right, and that's the biggest thing. If even one of your basis points are not on point, do not take the trade. So I know a lot of you probably do this, even though it may be lining up with, say, your strategy and the time of day. But if your analysis isn't fully there, it's not giving you confidence to take a high probability setup, right? So you're better off not taking the trade in the long term. This is going to help you out a ton. Like when you guys have a set plan for yourself every single day, it's going to make the actual psychology aspect of trading an insane amount easier for you. Like in my opinion, trading is probably 85-90% psychological compared to just looking at, chart patterns or candlestick patterns, whatever. You got to have a strong mentality when you're going to trading. You got to be disciplined, and that's what having a set plan like this is going to help you do. You guys can either copy this or make something similar to this to keep yourself in check and disciplined. Just let yourself know when you should and shouldn't be trading. That is the basis of not breaking your rules. All right, guys, so the second reason why you guys are probably not profitable traders yet is because you just don't understand risk management. Think about it this way, and this is pretty obvious. Mathematically, it is a lot harder to recover a loss than it is to actually create one, right? And also, I'm sure a lot of you aren't trading with a defined amount every single trade, meaning you're not using the same amount of capital or risking the same amount of capital for every trade, right? Let's go ahead and take a look at this chart I made here. So we got your drawdown versus profit recovery rate, right? I'll say this is all by risking 1%. Just make sure you guys realize, stay on track. I'm just using 1% risk as an example for this. So you draw down, you go down 5% on the account, right? Now, to get that 5% back, you need to make 5.3% back on your account to actually be back at even. That goes down to 10. You go down 10, 20%, right? That's 25% for 20% loss that you need to recover. Now, once you go under that 20% drawdown, you need to be super careful because then you're entering what is known as like the danger zone, right? So you go down 30%. It takes 43% of your account to recover yourself and go back to even, right? So you see where I'm coming from? You got to be super careful and realize what your drawdown to profit recovery rate is. So if you guys want to screenshot this, feel free. And then I'm going to show you guys another chart here in a second. But yeah, back to what I was saying, guys. I know some of you are using half of your accounts, throwing your whole entire portfolio into a trade, and that's just not going to be profitable in the long run. Like, it's just not. And I'm not talking about the challenge accounts, like where you're just trying to build the account fast and just finish it, and you're just, you don't have much of a risk tolerance for it, right? Because it's a challenge account. All right, so we have this chart that I made up here. On the left, we have the losses in a row, and then it goes from loss percent, 1% risk, your 3%, 5%, etc., right? Also, even if you guys think you have like a 50, 60, 70% win rate, you got to realize you still have like a 90% chance to go down 6 trades in a row. This is why it's important that you guys lock this into your head and only use a defined amount of capital for every single trade you take, no matter what, because you're bound to go on a losing streak. And when you do use that defined amount, you can almost create a cushion for yourself where you're not wrecking your entire account, Now, this is going to allow your winning trades to outweigh the losing trades, right? And that's the whole goal, because that's what profitability is in the long run. You want to have those winners outweigh the losses, so you're still up. Now, I'm going to go even a little bit more into this. I'm going to pull up another chart here. So, and this is going to be different on futures and options, right? But I'm just using 1R, 5R, risked 1% just as an example to make it a lot clearer and easier for you guys to understand, if that makes sense. All right, so say we take 5 trades, right? And out of 5 of those trades, we lose 3, we win 2, but we're risking 1% every time, right? So we have trade 1, trade 2, we both lost. Trade 3, we have a winner. Trade 4, we have another loser. Trade 5, we have a winner, right? So our winners are going to equivalent to a 5R, right? And our losers are going to be that minus 1R. So if you come down here and you can see on the bottom left, you have defined risk. So say you're, like I said, defining that risk using 1% every single time you're taking a trade. You're losing 1%, 2%, right, on the first 2 trades. But then on 3%, you gain 5. So now you're up net 3%, lose 1, gain another 5. So you net total 7%, right, using a defined risk. Now, below that, you're going to see there's no defined risk. You're going to be trading with a random amount every single time, and look what's going to happen. Ready? So you have trade 1, say you lose 2%. Trade 2, you lose 1%, and then trade 3, you make back 2.5%, right? Then trade 4, you lose another 2%. Trade 5, another 2.5%. But now look at our total profit, 0%. We made absolutely nothing because you're not trading with a defined amount. Simple. I'm not sure how well this kind of explains it to you guys. If you want me to go into a full video on this, on risk management, I could do that. This all ties in, though, with discipline and the same thing, because you need to be disciplined to know to define that risk every single time. I keep saying it, but it's got to get embedded in your guys' head. All right, guys, so the third and final topic I want to go over in this video about why you're probably not a profitable trader is because you just don't understand your strategy. A lot of you are probably using a strategy, that may have worked in the past, or it works for someone else but doesn't work for you anymore, and that's fine. You guys also have to be journaling your trades. So you're not going to master a strategy in a few weeks or a month's time, You have to be journaling every trade you take, win or lose. Explain to yourself, like, write down in a journal why you took the trade. What could I have done better? Where did I go wrong? What mistakes did I make? How could I fix them? Explain it to yourself as if you were trying to explain it to someone else. That'll definitely help you go more in detail and will help you fine tweak all the little things you need to make that strategy profitable. Go back on the charts after hours. Look at setups that you think would align with your strategy. That goes all the way back to what I was talking about before, going into the market with a plan, right? Take that plan, you see the trade setup, then think about your bias analysis, all that, right? And then put that into a back test, and then let it play out and see where you went right, where you went wrong, what you could have done better. You guys got to understand, though, that you need a complete back of the hand understanding of your strategy, or else it's just straight up not going to work. And also, this is another thing that a lot of people misunderstand, is don't go switching your strategy, every 2 weeks or every month, because you're not getting anywhere. You're just pulling yourself back down when you could be using the same strategy and pushing yourself forward. And I'm not talking about adding and tweaking little things here and there to your already existing strategy, that's completely fine. Like, I personally based my strategy off of a few working strategies that I used to use, right? But added newer concepts to them. I added concepts over time. And what did I do? I back tested, journaled, and studied these little concepts to fine tweak a strategy that gives me the win rate that I'm confident in. Now, if you guys already think your strategy is good, that's great. The only thing you need to do from there is take that good to perfect, and you guys will be set. All right, I forgot to do an outro, so I'm going to do it on my phone. If you guys have any questions about anything I talked about in that video, or you want me to make a separate video about one of the topics, let me know in the comments. Any questions, let me know in the comments. I'll do my best to get back to them. That's pretty much it, guys. Been your boy YOLO. Catch you guys. Peace.